One of the most common questions I get asked is, if you had only $1,000 to invest in crypto for 2025, what would you buy? It's a good question because $1,000 is an amount a lot of people can start with. It's not pocket change, but it's also not life-ruining if things go wrong. And with the right moves, that $1,000 could grow into something much bigger over the next year or two. Now, let's be clear, this is not financial advice. I'm not telling you what to do with your money. I'm simply showing you exactly how I would personally build a $1,000 crypto portfolio for 2025, and the thinking behind every choice. This portfolio is designed for growth, but with some balance to avoid going all in on risky bets. I want exposure to big established players, but also some smaller coins with massive potential. So here's the breakdown, and I'll walk you through my reasoning step by step. The big picture. When building a crypto portfolio, I like to split it into 3 layers. Foundation coins, the safe, established giants of the market. Growth coins, strong projects with big upside potential. Moonshots, high risk, high reward plays that could explode. For $1,000, I'll be splitting my money into 50% foundation, 35% growth, 15% moonshots. That means $500 goes to safe established cryptos, $350 goes to solid growth projects, $150 goes to small cap coins that could do 10x or more. Foundation coins, $500, 50% of the portfolio. I know the exciting part is finding the next 100x gem, but the reality is every good portfolio starts with strong foundations. These are coins that I believe will still be around 5 to 10 years from now, with solid adoption and liquidity. For me, there are 2 coins that absolutely dominate this category: Bitcoin and Ethereum. Bitcoin BTC, $300. If you're in crypto and you don't own any Bitcoin, you're basically ignoring the king of the market. Bitcoin is the most recognized, most trusted cryptocurrency in the world. It's the one that big institutions buy when they want crypto exposure. For my portfolio, I'm putting $300 into Bitcoin. That's 30% of the whole portfolio. The reason is simple. Bitcoin has the best track record. It's gone through multiple crashes and always recovered to hit new highs. In 2025, with the Bitcoin halving already in effect, I expect a strong bull run. Historically, halvings have led to price surges over the following year. Also, Bitcoin acts as a store of value in my portfolio. While altcoins can be super volatile, Bitcoin gives me stability. Ethereum, ETH, 200. Ethereum is the backbone of decentralized finance, NFTs, and a huge chunk of Web3. Almost every major crypto project interacts with Ethereum in some way. I'm putting $200 into ETH, which is 20% of the portfolio. Ethereum is transitioning into a more scalable and energy-efficient blockchain. It's also generating huge revenue from transaction fees, which makes it more sustainable. In 2025, I expect demand for Ethereum to remain strong, especially with all the Layer 2 scaling solutions, bringing faster, cheaper transactions. I also like ETH because it has a huge developer community. If Bitcoin is digital gold, Ethereum is like the digital economy. Growth coins, $350, 35% of the portfolio. This is where I look for coins that are well established but still have room for massive growth. They're riskier than Bitcoin and Ethereum, but safer than tiny cap coins. For my $1,000 portfolio, I'm choosing 3 growth coins: Polygon, Matic, Chainlink, Link, and Solana, SOL. Polygon Matic, 150. Polygon is a Layer 2 solution for Ethereum. It makes transactions faster and cheaper while still benefiting from Ethereum's security. I'm putting $150 into Matic because I believe scaling solutions will be huge in 2025. As Ethereum adoption grows, people will look for cheaper ways to use it, and Polygon is one of the most popular choices. It already has partnerships with huge companies like Meta, Starbucks, and Nike. That's a sign of real-world adoption, not just crypto hype. Chainlink, LINK, $100. Chainlink is one of those projects that works quietly in the background, but is absolutely essential. It's an oracle network, meaning it brings real-world data into blockchain systems. Without oracles, smart contracts wouldn't know things like market prices or weather conditions. I'm putting $100 into Link because it's already integrated into hundreds of projects, and I see that number growing. With the rise of DeFi, reliable data feeds are more important than ever. Solana, SOL, $100. Solana is a high-speed blockchain known for extremely low fees. Yes, it's had some network outages in the past, but it's been improving rapidly. I'm putting $100 into SOL because it's attracting a lot of developers and NFT projects. It's also gaining popularity for gaming and decentralized applications. If Solana keeps scaling without downtime, I believe it could be one of the top performers in 2025. Moonshots, $150, 15% of the portfolio. This is the fun part. Moonshots are the coins that could go 10x, 20x, or more. Of course, they're risky, they could also go to zero. That's why I only put 15% of the portfolio here. For this portfolio, I'm picking 2 moonshots, a metaverse token, and an AI crypto. The Sandbox Sand, $75. The metaverse hype cooled off in 2023 and 2024, but I think it's going to make a comeback. The Sandbox is a virtual world where users can build, own, and monetize their digital land. I'm putting $75 into Sand because I believe virtual worlds will eventually find their place, especially for gaming and digital events. The Sandbox already has big brand partnerships, which gives it a head start. SingularityNet, AGIX, 75. AI is the fastest growing technology in the world, and SingularityNet is bringing AI services to the blockchain. Developers can sell their AI tools, and anyone can access them through the network. I'm putting $75 into AGIX because AI demand is exploding. If this platform becomes a hub for decentralized AI, the upside could be huge. How I'd manage this portfolio. Just buying these coins isn't enough. You need a plan. I'd review this portfolio every month to see if anything major has changed. If one coin doubled in price, I might take some profits and spread them into the others. I'd also set a target for taking profits in the bull run. For example, if the whole portfolio tripled, I'd take my original $1,000 out and let the profits ride. That way I'm playing with house money. Why I like this setup. Balanced. I have stable, proven coins like BTC and ETH, strong growth plays like MATIC and LINK, and a couple of high-risk moonshots. Future trends. This portfolio touches major crypto themes: store of value, DeFi, scaling solutions, NFTs, gaming, and AI. Affordable entry. With $1,000, you're getting exposure to 8 different coins without overcomplicating things. Risks to watch out for. The cryptocurrency market is an incredibly exciting place, but it is also one of the most volatile. This is a fundamental truth that every investor, especially new ones, must understand. Even established cryptocurrencies like Bitcoin, often seen as the most stable, can plummet by 30% or more in a single month. This level of unpredictability means that the smaller, newer coins you invest in are far more susceptible to massive swings. Some of the moonshots you hope will skyrocket could just as easily go to zero, leaving you with nothing. That is why my personal philosophy for investing in this space is built on a simple, disciplined approach. I only ever invest money that I can comfortably afford to lose. This isn't money for my rent, my groceries, or my emergency fund. It's a speculative portion of my income that, if it vanished tomorrow, would not impact my life. This mental discipline is crucial because it removes emotion from the investment process. When you're not panicked about losing your life savings, you can make clear-headed decisions during market downturns. My second rule is to never go all in on one single coin. My safety net and the most powerful tool in my risk management strategy is diversification. So with that in mind, here is my detailed breakdown of a hypothetical $1,000 crypto portfolio for 2025. This portfolio is designed not to guarantee a specific outcome, but to give me the best possible chance at growth while carefully managing risk. I allocate half of the portfolio, or $500, to what I call strong foundations. These are the blue-chip cryptocurrencies, the giants of the industry like Bitcoin and Ethereum. They are the anchors of the portfolio, providing a degree of stability and a proven track record. While they might not offer the explosive gains of smaller coins, they are far less likely to disappear overnight. They are the bedrock of the portfolio, the part I expect to hold its value and provide a steady, long-term return. Next, I allocate a third of the portfolio, or roughly $330, to what I call growth projects. These are coins with solid technology, a clear use case, and a growing user base, but which are not yet at the very top. These would include the AI-focused projects we discussed earlier, like VeChain or Hedera. This portion of the portfolio is where I look for returns that are higher than what the foundational coins might offer, but with significantly less risk than the volatile moonshots. These are the coins that have the potential to grow fivefold or more as their technology gains wider adoption. The remaining portion of the portfolio, about $170, is reserved for moonshots. This is the highest risk, highest reward part of the portfolio. These are the new projects, the highly speculative tokens, and the coins that have a very high chance of either failing completely or returning 100-fold. I would never put a significant portion of my capital into these, but by dedicating a small, calculated amount, I give myself a chance to participate in a massive rally without putting my entire portfolio in jeopardy. Could this portfolio 3 times, 5 times, or even 10 times in value? It's certainly possible. A strong run from the foundational coins, combined with a few successful growth projects and a single lucky moonshot, could deliver life-changing returns. But could it drop significantly in value? Absolutely. A market-wide downturn would affect every part of this portfolio. That's the reality of crypto. My strategy, however, isn't about avoiding all risk. It's about intelligently spreading that risk across different types of coins, allowing me to stay invested in the major trends without putting my financial future on the line. If you're building your own portfolio, take the time to research each coin. Don't just copy someone else's picks blindly. The more you understand your investments, the better decisions you'll make when the market gets crazy. Because in crypto, it's not just about buying low and selling high, it's about surviving the volatility so you're still in the game when the big moves happen.